Hey guys, what's going on today? So today we'll be covering topics about option spreads and why they're better than normal regular calls like calls and puts. They're called in terminology as naked calls and puts, and we'll be going over spreads and different strategies with the advanced option strategies, and we're also talking about the entire market and what picks I'm looking at for this month in December and what I'm looking at to invest in later on in 2019 depending on how markets play out. And we'll also go over a few other topics briefly today, but mainly I want to cover options strategies, mainly option spreads. So let's go ahead and get into it. Let's do a quick market recap, but before we get into that, please be advised of all the disclosures and disclaimers that we have, and that can be found in the description at pinnacletrading.us, last disclaimer, and you can find that over there. And the website is pinnacletrading.us. Alright, let's do a brief market recap before we get into the option strategies. So being that I'm looking at futures right now, that's /ES, that's S&P 500 futures. You can see we have that huge market dump, and then we're seeing some sort of small recovery, and that hasn't followed through too much. So let's see if that can play out tomorrow as markets are closed today to honor former President George H.W. Bush. And let's look at S&P 500, see the yearly chart on this. So being that we're seeing S&P 500 test at highs and come down all the way down here to 265, 260 area. We're seeing it bounce back. That's a double bottom bounce, and again it got rejected off that 285 area again, and it didn't get to there. So being that this week it did get up to around 282 area and then got rejected off of there. And looking at the yearly chart on this, we're seeing that correction follow through again, and we're seeing that big market drop. We had the news day before over the weekend about China and Trump making some sort of deal about the trade war, but we haven't seen that follow through, and there's still some up and down moments with that. China is saying different things, the US is saying different things, so we haven't seen it follow through. And again, we're seeing that market crash or a market correction follow through in again, and that's why we're seeing that drop and that big sell-off as things are really unsure right now. So again, let's see what is coming up in the markets. Looking at the 30-day, again, markets are testing that 270 area. They did break it briefly on Tuesday, so yesterday, a little bit below 270, but again, we're seeing it come up there, bounce back up from there a little bit in the aftermarket, and we've also seen banks take a hit. That was a big thing that caused that drop on Tuesday, and we're seeing banks take a hit. All BAC, Bank of America, fell all the way from 28.45, fell all the way down to 26.73, and I took a position on this. I'll explain why I took my option position and my shares on that one. But that's just a brief market recap that I want to go into, and let's jump back into S&P 500, and let's go into option spreads and why they're a great way of protecting yourself in the market when we see volatile times like these. And when you see markets are up and down, they're not going up steadily or going down steadily, just up and down moment, sideways moment, and really unsure with the markets. So I want to do a example on what an option spread actually is. So let's take Apple right now. So you see Apple is at 176.69. Let's go into that Thinkorswim. You can see on the yearly chart, Apple fell all the way from 233.47. So being that it fell down from there and fell all the way down to the 170 area and bounced off. And if you've seen my video on Apple and why it's a great buy at that low 170s area, I said that it'd be bouncing off that 170, and that's where it should be taking an initial position from there. And then once it gets that over 180, breaks over that 190, that's where you can add to the position. If not, then I would just sell it and then pick it up back lower, wherever it looks to be bottoming out at that 175 or 170 area. Or if it breaks below, then wait and then accumulate shares again. But looking at the yearly chart, we're seeing the MACD cross over into the green, but we're seeing it sell off again in the market. So let's see tomorrow's Thursday in the week. So let's see if it can come back up. If we see a market bounce back up, if not, then we're going to see Apple fall continue to fall more down to that 170 area. So let's do a covered option on this one. So let's go ahead and go to optionsprofitcalculator.com. This is a great site that I use for doing call spreads. So this is where you buy a call and sell a call that's higher, or you can do that with the puts, buy a put and sell a put that's lower. Vice versa, you can be bullish on this or bearish depending on the strike prices chosen. So here it states if you're bullish, then that's what you would use, and if you're bearish, that's what you would use. So bullish means you want it to go up, bearish means you want it to go down. So let's plug in Apple on this one. It gets the price for you, 176.71. That's where it closed. This might not be too accurate 100%, but it'll give you a good estimate, so it'll give you a good